joined by Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services. Akshay, afternoon, and thanks so much for joining us today. So Coal India, that's the first stock that you've picked for us. And the stock is up nearly 3% today as we speak, 390. In fact, it has shot up just in the last 1 hour or so. Where do you see the stock headed?
First of all, good afternoon to all. Yes, Coal India has caught a strong round of momentum in intraday trades, and if you were to look at the broader technical charts, I think it's been almost 7 months of range-bound trading for the stock, stuck in a range of around 380 to 400 zone. That's the price range it is in, but I believe that this stock is on the cusp of a major breakout. It's a 7 to 8 month breakout. Momentum has caught up today, which may take the stock up till around 415, where a major breakout level awaits. If this surpasses, I'm looking for positional targets till around 430 to 440 for the month of September.
430 to 440, that's the target coming in on Coal India. The stock, as I mentioned, is up 3%. But let's also put the spotlight on the entire financial and the BFSI sector in particular. This is on the back of a Jefferies report where they say US tariffs are likely to have manageable impact on Indian lenders. In fact, they also say that total exposure to tariff-related and affected sectors is likely to be at around 4 to 6% of total bank credit. In fact, within the sector, their target price and top picks remain unchanged. They continue to like HDFC Bank, Axis Bank, ICICI Bank, SBI and Kotak Mahindra Bank. Within the banking and financial and the BFSI segment, they also like Bajaj Finance, Chola and Shriram Finance. Gold NBFCs like Muthoot may also be insulated from any tariff-related impact. So that's Jefferies on the entire sector on the back of tariff-related impact where they don't see any major impact, and hence the entire sector is in focus on the back of this Jefferies report.
All right, moving on then to the next counter which is in focus, and that is Crompton Greaves on the back of the fact that they've received a letter of impalement from Madhya Pradesh Urja Vikas Nigam for a design, manufacturing, supply, transport, installation, testing and commissioning of off-grid DC and AC solar photovoltaic water plumbing system, under the component B of PM Kusum B, which is being implemented in Madhya Pradesh as PM's Krishik Mitra Surya Yojana. And on the back of this order win, Crompton is in focus, though it has declined from the day's highest point right now towards the lowest point of the day, trading with cuts of more than 0.5% right now.
Okay, so that Crompton Greaves for you. But let's also put the spotlight on Acme Solar then. Rabinder, the stock is in focus based on a positive news flow.
Well, yes, Acme Solar is in focus, where company has been awarded a letter of acceptance for 50 megawatt firm and dispatchable renewable energy project at a tariff of rupees 4.43 per unit in a 250 megawatt FDRE tender floated by the Tata Power, and the FDRE tender was floated under a tariff-based competitive guidelines for which an e-reverse auction was conducted on August 13, and the project will be required to maintain a minimum annual CUF of 40% and ensure 4 hours of peak hour supply with the 90% availability of a monthly basis. So back of this LOA, Acme Solar is in focus and the stock is up approx 3%.
All right, moving on then to the next counter, which is NTPC. Akshay, you picked out NTPC for us. Tell us what do you see on the charts for this?
Well, if you look at again the price action for NTPC, I think it's over 5 months now that this has also been confined in a trading range, roughly around 335 plus minus 5 odd points. That's the pivotal zone, but I'm of the view that this stock should be showing some positive moves soon. The breakout zone is somewhere around 345. So initially the short-term trading targets works till 345 where a major breakout is placed, and I'm looking at the price structure. I feel this breakout should be on in the month of September, post which targets of 360 to 365 open up on the charts. So positive view broadly for targets till 360 with a stop loss below 325 on NTPC.
Positive view on NTPC and 360, 365, that's the target price coming in. But meanwhile, Vikas Kumar Jain, Head of Research and India Strategist at CLSA India, mentions the list of sectors that he prefers. He continues to remain bullish on staples, utilities, IT, autos and real estate. Let's go across and listen into what he has to say.
Our setup, our favored areas are defensive sectors, number one, consumption, and rate sensitives. So those are the three themes that we are focused on in terms of how our positioning is. So when I say defensives, staples, utilities, and IT are our overweights. Along with that, if you were to look at consumption, then autos along with staples falls in that bracket, and autos with real estate also falls in that bracket of rate sensitives, small overweight in banks, and more stock specific kind of overweight in energy. That's really how our India focused portfolio is positioned at the current juncture in terms of. But again, some of these events could make us rethink and look at positioning, even more closely if we have to change something, make it more extreme, or change into another sector. I think some of these events could pretty much matter a lot.
All right, moving on to the, let's get going with all the stocks that are in focus today then. Kanishka picked out Yes Bank for us. Tell us what's the news for Yes Bank?
That's right. So Yes Bank is in focus today after the CCI has cleared Japan's SMBC's proposal to acquire 24.9% stake in the lender. Now remember, this comes after RBI had earlier given the nod and said that it will make SMB the single largest shareholder in Yes Bank, though it won't be classified as a promoter. Now, the stake purchase involves buying 13.19%, 19% from SBI and 6.81% from 7 other banks. This would further cement the Japanese giant's presence in the India's financial sector, and that's the reason why Yes Bank is in focus on the back of that CCI nod that has come in, up about 4% as we speak.
Okay, so that's Yes Bank for you. The stock is up 4%, but let's also put the spotlight on Masgao Dock, and this is on the back of an antique report where they're maintaining their buy stance in the stock with a target price of 3858 rupees per share. They say large order pipeline, though delay in order finalization, may result in revenue growth moderation going forward over the next few quarters. Provisions, meanwhile, are likely to normalize by the second quarter of FY26. Capex plan is to double their capacity going forward. In fact, Antique also says that they continue to remain positive on the stock given the large order pipeline, unmatched position in submarine building, and government's focus on developing India's shipbuilding sector. They're retaining their earnings estimate. They're maintaining their buy stance. 3858 is the target price, and the stock in focus on the back of this. Although the stock is not doing much, at the moment is sitting with a cut of nearly 0.6%.
All right, not much action coming in on Masgao Docks. It's sitting with a cut of more than 0.5%. But actually, you've picked up SRF for us. This chemical name hasn't really done much. It has been very, very range bound. What do you see? It has picked up momentum in the last few days, 5 odd days, 4% gain coming in. Do you see this uptick to continue?
Absolutely. I'm pretty much positive on SRF from the current levels. If you look at the prices, recently the bounce back which materialized from the levels of around 2820 comes from its 200-day exponential moving average. Secondly, there are multiple times that the prices have shown a tendency of a strong rebound post the levels of 2800 were tested. So a similar kind of pattern is unfolding, and I'm expecting upsides roughly till around 3200 in SRF. So a positive view, maintain a stop loss below 2800 in SRF and looking forward for targets till 3200.
So positive view coming in on SRF, 3,200 is the target price. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side.